Good evening, ladies and gentlemen. I'm your host, Rachel Curlew, AVP of Investment Banking. Thank you for joining us on another investor briefing. Today, we'll be looking at Mayberry Jamaican Equities Q1 results. On the panel, we have Christopher Berry, our chairman, alongside investment manager representative Gary Peart. Welcome, gentlemen. If you're a fan of the content, then don't forget to hit subscribe. Also, hit the bell to stay up to date with the channel. And just a reminder that we'll have our usual Q&A segment after our discussion. So feel free to drop your questions in the chat and we'll get to them closer to the end of the program. Also, if you want to embark on your first investment journey, take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. And with that, let's jump into it. So as I mentioned earlier, we're reviewing MJE's first quarter ending March 31st, 2025. So looking at the financial highlights, MJE reported total assets of 21 billion, representing an 11% decline from the 23 billion recorded as at the end of the December 2024 quarter. This decline was largely driven by market volatility, which negatively impacted some of the valuation of some key investments in that portfolio, but we'll explore this in great detail shortly. We're seeing here that shareholders' equity stood at 50.5 billion, down 13% from the 18 billion reported in December's quarter. Again, this contraction was primarily due to the unrealized losses on investments, which eroded retained earnings and fair value reserves, but we'll get into that later. And because of this decline in shareholders' equity, we're seeing that it translated to a 13% decline in net book value per share for the quarter to $12.87. On the income side of things, the company reported a loss per share of $1.82, reflecting a 73% decline compared to the prior March period. And we're seeing here that they booked total comprehensive loss of 2 billion, which is a 187% decline. Finally, we're also seeing that MJE's stock price increased 10% to $11.07, up from the $10.02 reported the prior March period. Moving to a granular look of MJE's income statement, which is on the screen now, we're seeing here that the company reported a net operating loss of 2.2 billion. This is a decline from the 1.3 billion loss they reported in the March 2024 quarter. Operating expenses remain relatively flat at 47 million, indicating that the increased losses that we are seeing are primarily driven by the market rather than internal cost expenses. The company actually booked net unrealized losses on investments of 1.9 billion, up from the 1 billion unrealized losses in the corresponding quarter of the previous year. So the losses here are definitely market driven. And as a result of all of this, the company reported net loss for the quarter of 2.2 billion, while total comprehensive loss amounted to 2.4 billion compared to total comprehensive losses of about 843 million the prior period. Moving to the next slide and looking at the balance sheet overview, we're seeing here that total assets fell by 2.6 billion during the quarter to 21 billion. The most significant reduction was the 1.6 billion decline in investments in associates, as we mentioned before, which is driven by the decline in market values of some key investments in MJE's portfolio. Total liabilities declined 3% to 5.6 billion. MJE continues to maintain a low leverage profile, with debt levels representing a very small portion of total assets and the total equities, just underscoring the company's conservative capital structure. Chairman Berry would have indicated in his last briefing that we did in February that this capital structure allows MJE to absorb market fluctuations more effectively and positions MJE to capitalize on future opportunities without facing liquidity or solvency pressures. Looking at shareholders' equity, that stood at 14.5 billion, down 13% from the 17.9 billion reported in the December quarter. But again, as I mentioned earlier, this was due to unrealized losses on investments, which eroded the retained earnings. Moving to the next slide, looking at the portfolio activities for Q1, we are seeing that MJE deployed some capital into JMB, SVL, MIG, JBG, and Carib Cement, but all immaterial compared to the size of MJE's portfolio. On the disposal side, the largest sale for Q1 was JP, followed by divestments in Lasef, Fesco, Wisinco, and Sagicor. This could be realignment away from underperforming stocks or MJE just realizing some gains, but we'll get a chance later to ask Mr. Berry and Mr. Peart what's the strategy here. Looking on the next slide, we are seeing the top 10 largest holdings in MJE's portfolio. The portfolio remains concentrated in SVL, which now accounts for 56.4% of the total value of investments, an increase from the 51.7% this time last year. So almost a 5% increase here in SVL. The other top holdings by value include JBG, 8.5%, up from 7.9% last year. Wigton, 6.3%, up from 4.5%. And Dollar, which now stands at 3.7%, up from 3%. And finally, you will note that CPJ and Lasef are no longer among the top 10 holdings. Just a reminder, MJE exited its position in CPJ in July last year and realized gains on that investment. They sold their stake at about $10.50. Turning to the next slide, we are looking at MJE's net book value per share and its share price. Here we're seeing that the net book value per share, shown in the darker blue, declined by 4%, falling from 14.89 in March 2024 to $12.87 as at the 31st of March of this year. But despite this decline in MJE's NAV, the stock price performed positively. It closed at $11.07, which is a 10% increase from the $10.02 we saw last year in March. With the NAV now below the stock price, I think by now, we all investors know this signals the right opportunity to buy the stock. We can see from the next slide that MJE's stock typically trades below its NAV, which demonstrate the stock is undervalued and indicate this is the right time to buy before the market picks up on this and corrects itself. With MJE's NAV being below the stock price, this signals it's a good buying opportunity for investors. And with that said, we are seeing on the other slide that MJE's stock price has historically been trading at a discount to the NAV. But again, this just offers additional upside for potential investors as market sentiments can shift and the price can begin to align more closely with the NAV. So it's a good time to capitalize on this opportunity by adding MJE to your stock portfolio. And with that said, that concludes my analysis, and I will jump into the Q&A segment of the program. So my first question is to you, Mr. Peart. It's the most obvious question here. Total comprehensive loss amounted to 2.4 billion for the quarter. What are the key drivers here, and how does MJE plan to mitigate further losses and the volatility that we're seeing in the market going forward?
Yeah, sure. Hi, good afternoon, everybody. The main driver of the first quarter loss was the reduction in the share price of Supreme Ventures. As most people would know, or most shareholders would know, SVL represents about 50 odd percent of the
56.
portfolio, 56% of the
Mm-hmm.
portfolio. And so you saw a reduction in the share price over the first quarter, which is representative of the performance of the stock in recent times. It had a really bad fourth quarter last year with muted dividends of around 4 cents a share. But the good news is that the first quarter actually showed a rebound in core profits. It declared a dividend of about 17 cents, could have been potentially higher. And the expectation is that the second quarter should be much better than the first quarter, and it should be a very good year for them. I think once that starts playing itself out, most of those losses will reverse. And most importantly, you will see where their dividend payments start to revert to what it was in the past, which would definitely help MJE because you would see that the dividends received in the last quarter was pretty muted. When SVL is firing, it throws off really, really good dividends, which assists the portfolio. So I think that return to growth by itself would reverse most of the loss that we've seen. Another contributor was National Commercial Bank, and that's my dark horse for 2025. Until the major shareholders' issues are resolved, you're going to see a drag on that stock price. But I think it's the best stock out there to buy right now. It's like catching a falling knife. You don't know how low the stock is likely to fall. But until, as I said, the major shareholder figures out his issues, literally the moment that confirmation is received, you will see a reversal that you'll never believe in that company. And the reason I say that is that NCB as a business continues to put out some really, really good profits. Um, the first quarter was distorted by that sale of subsidiary in Guardian. So on the face of it, you had this massive jump in profit. I mean, it's real, but on the face of it, most people would figure that it's not ongoing. But when you analyze the numbers, you will see that NCB continues to be growing in profits and revenues. And I think one of the key indicators of further growth is when they move to change in dividend. They've consistently paid 50 cents, but you're seeing where the quarterly profits continue to go up. So there must come a point when you see that dividend start inching up. And obviously, I think they'll be under pressure from their major shareholder as well. So I like the stock, and what I'm seeing is a temporary reduction in what the true value of that stock is. I think NCB is worth in excess of $100. So, when it finally rises to its true potential, make sure you have MJE, the only stock you need to own.
Great. Thanks for that, Gary. So just to summarize for viewers, as Mr. Pert mentioned, the decline in SVL's share price would have affected MJE. Here they reported a 1.9 billion loss in fair value through P&L. So that's what happened there. And also, as he mentioned, dividends fell off a bit for the quarter, and it was as a result of SVL's dividend income, which he has now indicated. They declared a dividend of 7 cents. So that
17,
17
17.
cents, 17 cents. Thanks for that clarity. So as the quarters go by, we can anticipate that SVL's dividends will be back on track. And we got some free advice. He's anticipating NCV of the trading at 100. It's now at 43.57. So feel free to get some NCB while you're at it, or even SVL. It's trading at $19, 19.77. So that's also a good stock both excellent dividend income stocks you can add to your portfolio. Mr. Berry, I have a question for you. So we noted some disposals for the quarter, JBG, LASEF, and FESCO. What's the strategy here, and how does this align with MJE's long-term investment strategy?
Not really any strategy behind it. I mean, I think, from as we trade during the period, sometimes there are some stocks that we trim based on their short-term prices and some that we add. No real magic to it. I mean, I think of the ones you mentioned, I think only JBG is a core holding, and if you look on the amount of JBG, it's really not really material at all. It's a very small.
Correct. It's 8.5% of the total value of the portfolio. I think that leads us into Limitless.
No, I'm saying if you look at the amount that was sold compared to the
yes,
amount of JBG,
yes,
it would be probably a fraction of a percent.
Correct. It was about well, JBG is not on my top 5 listing. JP is here. 100 million of JP and about 64 million of LASEF that was sold for the quarter. But as you mentioned, immaterial to MJE's portfolio, which is almost 16 billion. So I'm agreeing with you there. Limitless Podcast has an interesting question. He's asking you, Mr. Berry, what specific stock valuation metrics currently have the most influence on your buy decision in the current market? He's looking for some free advice.
Well, the thing is, when we're buying, some of the things are the same things that most investors look for. So, we tend to focus more on a medium-term growth opportunity than short-term growth. So we hardly buy stocks to just flip them in a few months. Because one of the reasons is look at the size of our portfolio. Typically, when we're trying to buy like 5 million US or 3 million US or 10 million US. So, it's not that readily available. So you have to have a longer time horizon because it takes a while to get in and a while to get out. Mm-hmm. The other thing we look for is, like the growth. How is the growth going to be over that same period of time? How are they doing in the market? Is the industry being positively or negatively affected by what's happening in the economy and the government policy? And of course, one of the things that we added many years ago is can we really add value to what the company is doing? So we like to buy into companies where we can help them to actually grow their profits or their revenue, or so that one-on-one will add up to 3 or 4 or maybe even 6. So those are some of the things we look at, I would say, the main things, I would say.
Okay, great. Thank you. I want to throw this next question to both Mr. Parrott and Mr. Berry. So the main market right now, year to date, is down 2.5%, and the junior market is down about 5.8, a little less than 6%. What's your view of the equity market for the remainder of the year? I'm not sure who wants to take it first. I'll give you Mr. Parrott. You can address first. Consider Mr. Berry just answered this last question, and then I'll turn it over to Mr. Berry.
Sure. What specific question again?
So I was just quoting, the main market, it's down 2.5%. The junior market is down almost 6%. I want to know, what's your feel of the equity market for the remaining portion of 2025?
Well, I think globally and in Jamaica, people aren't sure what's happening. The whole tariffs issue. 1 minute we have tariffs, the next minute we don't have tariffs.
True.
And anytime the marketplace is unsettled, people tend to go to cash. So even though there are some pretty good buys out there, I think most portfolio managers feel more comfortable staying in cash at this point in time. And I think that's the main thing affecting the equities market. There was a belief by some that interest rates would fall based on the initial expectation, based on what Trump said in terms of where the tariffs would go. Then people were worried that interest rates would jump. I know you've just heard that there is a temporary cessation between China and the US, and stocks have jumped again in the US, and people have settled down. So it depends on where we end up, I think, from a Jamaican perspective over the next 2 to 3 months. But then next 2 to 3 months, you get some more clarity on the election, and that brings again some uncertainty. And so traditionally, leading up to an election, if there's some amount of uncertainty on the economic side, the market just saunters, sideways or maybe down. That said, we still see very good value in a lot of stocks in the market. And as Chris pointed out, based on the size of our portfolio, when it used to be 10 million US, it wasn't that difficult to try and double it to 20 million US. When it's now 100 million US, it takes a bit longer to be able to do that. And that's one of the reasons we like, to a certain degree, what's happening in like NCB. It gives you more time to get a bigger slice of that pie, right? So you just gradually add certain key stocks. I think once we get through this period, especially internationally, with Mr. Trump and his tariff story and the rest of the world, and people settle down, I think we should go through a nice little period, and local markets will track that at that point in time. It's been one of the things that's been happening is that based on what was in front of you. I remember last year this time I was expecting that NCB would have turned around by now. But the malaise with the major shareholder continues. But there will come a point where that ceases, and immediately upon that resolution, whether it is there are new owners for the bank or he continues to own the bank, you will see the immediate change in the stock price. Is that going to happen tomorrow? I don't know. Is that going to happen in a year? I'm not sure. But what I can tell you, as it trades lower, you continue to hold to build your portfolio, and when it occurs, you'll be smiling all the way to the bank. That's why we keep saying, buy MJE. It's the only stock you need to own, because we sit and we look on the long-term value of these things. You mentioned SVL before. I mean, I can say so much and no more, because that's one of my day jobs nowadays. But I don't think you'll be able to get SVL at these levels, next year this time. But then who's to know? So some people sit on the side with cash. Based on where interest rates are in a year's time, if you get 8% before tax, you'll be happy. But some of the stocks that are out there, if you pick them up now, you may see an unrealized loss of 10% over the next 3 to 6 months. But when that flips, you may very well get a realized gain in a year's time of in excess of 50%. So it's your choice.
Thank you for that, Mr. Berry. Would you like to add your view on the equity markets for 2025?
Yeah, so for me, the main thing I'm tracking right now is how much cash there is around for people to actually spend, how much liquidity. So, based on what I'm seeing so far for the first quarter, overall liquidity seems to be improving. I think a lot of the fears of our new US president are now subsiding. So on the balance, I feel that, the whole cash flows should improve. and liquidity should improve for the rest of the year, and that's going to be positive for the market. I think already I'm seeing, although it's not showing up in the market, other trends that I'm following, I'm seeing, liquidity out there in the market, people spending, and I expect that trend to continue throughout the rest of the year. As Gary says, high level of uncertainty, so it may not pan out. But if I was a betting man, I would say, this year should be a better year than last year.
Great, thanks for that. And talking about liquidity, I know MJE has a public bond that's coming up for maturity in July of this year. What are your plans? Are you going to refinance, possibly upsize, get some extra cash for further investments? What's your strategy here?
Well,
Well,
I was hoping that Rachel would be. I haven't received any advice from you or Dan yet, so I've made up my mind.
Well, I was actually told by the arranger that the market loves an MJE bond, and when I asked why, they said that because MJE is domiciled in St. Lucia, you don't have the withholding tax. So, for those investors out there that's looking a really good bond to buy, MJE, in addition to the only stock you need to own, is the only bond you need to own. So because you don't have that withholding tax, the coupon rate is your actual final rate. And so, that is a very attractive thing for us. To answer your question, Rachel, I mean, we're fully funded, for want of a better word. We see the positions that are there. If we see something really compelling, we could potentially increase the amount. But at this point in time, we have a nice blend of relatively low leverage. We took leverage last year when we saw some opportunities. If we see opportunities coming up again, we can increase it. But we like having low leverage. What it does is that it can, it doesn't matter how good your long-term thesis is. If you can't hold a stock in times of volatility, then you're going to be in problems. And the beauty about how we manage MJE, we have gone through some of the toughest periods in the JSE history. I mean, COVID, the stock market lost 30% in 2 weeks. And the portfolio wasn't a problem. Again, you look on this first quarter, our main holding dropped by over 20%. It has triggered an unrealized loss of $2 billion, but you still have $15 billion in equity. So that's one of the key things that we look at when we're managing this portfolio. We take the bets, but we take calculated bets on the basis that we have sufficient equity to withstand a fair degree of volatility. Because this too shall pass, and when it passes, we'll benefit significantly. So let's see. I mean, we can take some more if we want to take some bigger positions, but at this point in time, whether we take it or pay the bond out in full, we'll get to that decision in short order.
As your advisor listed, that MJE bond is a very attractive bond, but I understand that conservative capital.
Well, remember, Rachel, when we sold CPJ and retired some bonds, we actually had investors cuss us. Why are we paying them back, their money? We had people questioning our ability to refinance bonds. We said at the time, I think our leverage was like 30%, which is relatively low for a portfolio. And since then, we paid down more bonds, and people are like, why don't you borrow more money? Why don't you borrow more money? And so we're happy that we're able to take monies from people, invest it, make our piece, pay them their piece, and then pay them back their principal. Not many people can say that.
Absolutely.
So we're active in the marketplace, and we're very careful how we build a brand and build a credibility. And what we now know for sure is that, once you see an MJE bond, hurry up and buy it because you might not get another chance.
So true. And, viewers, for a $16 billion portfolio, having just about 30% of leverage is very impressive. It's custom for companies to have 2.5 to up to 4 times leverage, a debt to equity ratio, for example. So, they're really conservative in their capital structure at MJE. But as Gary indicated, this allows them to absorb market fluctuations without experiencing any liquidity or solvency issues. So they're the gurus here. So we learn from them. Mr. Berry, I know you had something to say, and Mr. Perry started. Would you like to continue?
No, I was done. Thanks.
Yeah. Okay. Great. I have a question here from online. Limitless Podcast. He's asking, could you explain how your reduced stock purchasing in Q1 fits within your overall investment strategy? I believe Mr. Berry answered this question early. He indicated the positions that were added were very material compared to MJE's overall portfolio. Both the disposal and the additions were material. It doesn't necessarily align with their long-term play, which is, big positions, but they have to trade the portfolio and realize some gains from time to time and take advantage of some opportunities that they definitely cannot give up. So that's the strategy for Q1, and I'll take that the strategy for the rest of the year. Would you have anything to add, Mr. Berry?
No, not really, because that's just basically what we do. We're mostly seeking larger positions, and right now we're not. I think we're a bit early last year in terms of loading up on some stuff. We thought the interest rates would have come on faster, the market would have rebounded faster. So we're already where we want to be in terms of buys, and definitely don't want to sell at these type of prices. We don't need to, so we're fine. We're kind of right where we want to be right now. Unless we get a really good deal, then we just come for some equity or some debt and buy. But we don't have any opportunities like that right now.
Great. Thanks for that. Mr. Perry, I have a question for you. As we mentioned earlier, SVL accounts for 56.4% of the total value of MJE's portfolio. Do you view this as a concentration risk? And, how does a company manage portfolio diversification?
So the purest definition of concentration risk, I mean, yes, it would fit it, because 56% of the portfolio is in one stock. But after 20 odd years or more of doing this, what is investing? Investing is you're trying to find an asset that gives you a reasonable return. After you find that asset and it's giving you a reasonable return, if you sell it, you book gain, and then guess what? You go back to trying to find an asset that gives you a reasonable return.
Sure.
So if you find an asset that can give you a really good return over the long term, why should I sell it just to say that I have a diversified portfolio? So if you stop and you think about it, you usually have stocks in two different categories. Stock that gives you a capital appreciation and stocks that gives you income via dividends. We get both from Supreme Ventures. And more importantly, based on where the company is now, the company has about 4 or 5 different business models, and every single aspect of SVL has material growth potential. With the reason for the bad quarter in 2024 was, the level of investment that we've made in terms of is, yes, there will be changes for obvious reasons. I can't tell you what the specific. Sorry, so in 2024, all the investments that we've made in these different businesses we had to account for them, especially on the software side. So what a lot of people miss is that, at Supreme Ventures, we are now technically a technology company because we have been developing our own proprietary software. We have a proprietary lottery software, we have a proprietary bill payment software, we have a proprietary phone top-up software, we have proprietary remittance software. And these investments cost a bit, and so whilst you're building the software, you now have to do the rollout, and so some of these businesses require certain approvals. We've now received approvals from a lot of those now, and so going forward, you should see those other businesses coming online. So when all of those businesses come online, you're going to see a totally different business. So what do you do if you are sitting on a company that potentially in the next 5 years could potentially increase in value 2 or 3 times? Do you turn around and sell it, or do you buy more? So that's the challenge with SVL at this point in time. As it pertains to the other major holdings, I mean, we have holdings in almost 30-something companies, but core holdings probably are about 8 or 9. And these are the companies that, are going to drive the business, So you'll have ups, you have downs. You'd have heard Warren Buffett speak about Coca-Cola and how long he has been holding Coca-Cola. I mean, he might sell a little bit of shares and buy some more, but he's still, at this point, as far as he's concerned, there's still not another company out there like that company. And he has had positions in Coke for decades, So that's how we see SVL. To date, knock on wood, it has been a phenomenal investment, certainly in terms of the dividend, certainly in terms of the growth. And, once a management team can just unlock 50% of the current potential, believe me, you might ask me this question in 2 years' time: why didn't you buy more SVL?
True.
And the final point I want to make on that question about concentration: a fair degree of the percentage of SVL that we have in the portfolio has not come because of purchases of a similar quantum of SVL. What do I mean by that? A fair degree of the percentage of the portfolio in SVL has come from gains from our initial purchase in SVL. So that's very key. I mean, I think we took this position. Sorry, I think we took this position in SVL somewhere around the $7 or $8 region. So even at this depressed price of $19, that's a 200 or 300% increase. So again, you hold the position, it gives you a return in terms of the capital appreciation. Am I going to sell it when there's a potential for it to double or triple again? And the final point on the SVL story: the Jamaican market is not valuing SVL in the same way the international markets value a company like SVL. And we, as in the case of CPJ, as we demonstrated, when we had a discussion about the discount that people tend to have the MJE stock at, when we exit a position, we're not exiting a position at a discount to the market. We're going to exit a position at a premium to market. And if and when we exit the SVL stake, it's very likely to be to an international buyer, a strategic international buyer, who's likely to buy at a multiple not based on a Jamaican multiplier market, but based on an international market. So when you use those multiples, SVL is materially undervalued at $19. Wow. But let's see.
Well, I have SVL in my portfolio and I have MJE. So I'm already ahead of the game.
So Rachel, one of the things I want to point out to the viewers is that it may look like we bought more SVL, but we didn't actually buy more. What happened is because we sold CPJ, the percentage of SVL in the portfolio has increased because of that. So people should take note of that.
Yes, that point. Mr. Berry, CPJ accounted for almost 9% of your portfolio last year in July, and you sold at $10.50. So, absolutely agreeing with
Actually,
you.
just to add to that point, not only did we sell the CPJ, but because we used some of the CPJ money and sold and paid down the debt,
Mm-hmm.
the size of the portfolio has fallen, which is what has driven up the percentage of SVL as well. So, again, if we never paid down the debt, you'd have had a different percentage. But those positive things are what contributed to it.
Great. Thank you for that, Mr. Parrott. And I think that wraps up our Q&A segment for today. I've addressed all questions on social media and the ones that I have here. And, I own both, I own MJE, and, I think that at $11 where it's trading at, it's a great buy. It's trading below its NAV. And typically, we're accustomed for these companies to be trading close to or a premium. So investors, it's definitely a good time to take advantage of MJE. Mr. Parrott would have signaled that there are two stocks in the portfolio that he's anticipating will move this year. So you definitely want to get ahead of it. And that's it for today's discussion, ladies and gentlemen. I'd like to thank our viewers for tuning in. Big thanks to the panel, Mr. Berry and Mr. Parrott, for making this a great discussion. If you're curious about updates on our virtual investor forum, find us on social media. We share our live stream dates and upcoming guests on our official social media pages. So give us a follow and learn all things forum related. And tune in tomorrow as we discuss all things KEO, which we call it World, with their Chief Innovation Officer and co-founder Farid Shidhar. So don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications.
So why are we covering KEO?
We'll be
Why are we covering KEO? KEO is not a listed stock in Jamaica. Why are we covering KEO?
Mr. Ferret, I'm going to ask you to to answer this one for Mr. Berry.
Well, all those who think SVL is worth $19, they should come and listen to Keo. Because that's actually one of the hidden value that is in the SVL balance sheet. Keo is a fintech company that we believe is on the verge of breakout. And it's our way of sensitizing the Jamaican public. We don't want to surprise them. So if and when what we believe is going to happen, we don't need no crying and moaning that we didn't invest in MJE. The only stock you need to own or SVL. So tune in tomorrow to learn what's
So
a key.
what you're saying is that SVL is an owner of KEO and KEO is presenting tomorrow.
Yes.
Okay, all right.
Cool.
Thank you for that, Mr. Parrott. So investors, see you tomorrow, same time at 6 p.m., where we will have a Keo World on our program. Thanks again for joining, and do you have yourself a great day.